Hello, it's Callum Newman here with this week's Daily Reckoning video update. I'm thrilled to have you with me, and today we're talking about Australian housing. Earlier this week, I called it What's Going On Petrol on the Property Fire, and you'll see why in this video. I've got three key points I want to get across to you. Let me share my screen with you about the article I wrote earlier in the week. As I said, it was called Petrol on the Property Fire. And the reason for that is we got the latest statistics from the Aussie banking system come out last week, which showed the biggest monthly rise in credit growth in 11 years. And you can see that on the screen there. Now, that's really important. There's an economist called Michael Hudson who makes the key point that any house or any property is worth what a bank will lend against it. So if we're getting rising credit growth, we're going to get rising house prices, which is exactly what we're seeing right around the country in the capital cities. And we're also seeing rising rents. So that's a really bullish sign for Aussie housing and the Aussie housing cycle. But we just don't want to go off one data point. We want to go off as many as we can get. Now, as you know, I'm a stock analyst and trader. And so I follow a lot of the companies in the real estate space for Australia. And one of those is called Cedar Woods Properties. Now, they came out on Monday, and you can see I've brought up the release here to say that they've spent over $60 million to buy two big properties out on Melbourne's west. Now, this is a clear indication to me that the executive team there sees a lot of demand coming and a bullish housing cycle because they're locking up future development sites out for the next 8 years, in fact, in order to grow the company's earnings. Now, Cedar Woods is a company that operates primarily in Western Australia and Victoria, but I did think it was interesting that they still went ahead with the Victorian land supply that they're building. With Melbourne being hit by COVID last year, obviously, it's cut off a lot of the international immigration that was a big driver of the Melbourne housing cycle over the last 10 years, indeed. So there's enough demand there, though, from first home buyers and tree changes, etc., that and the shifts that we're seeing around from away from the CBD centres into some of the outer areas, that Cedar Woods is clearly bullish, and they're putting their money where their mouth is. So that's very interesting to see. We can also see another element of demand via Queensland builder Tamerwood, which had its presentation this week. And I'm just quickly bringing up the speech the chairman gave there. And if you note the point that he makes here, he says extremely high volumes of applications for bank loans have caused significant slow approvals. Now, he's pointing out that there's so much demand for credit from borrowers. The big banks are actually slow to approve the loans. Now, we don't have to necessarily worry about that, except it's another data point to show that, you know, things are hot out there. Credit growth is strong, so that means the housing cycle is going to be strong. Now, nothing I've told you there is earth-shattering, but it's important to observe. But I will point out one final thing that you won't hear from anybody else, I don't think. And it's a story that you might have seen across the newswires recently, where the Labor Party is going to approve the current government's income tax plan, which is come the year 2024, they're going to abolish one of the tax brackets, the 37% tax bracket, so that anyone earning between 45 and 200 grand is going to pay 30% tax. Now, the government will present this as a way to grow, consumer spending and what have you. But a little book I urge you to read, or not so little, maybe, from 1983, if you can get a copy, is called The Power and the Land. It was written by a guy called Fred Harrison, who's a contact of mine, still with us, who points out in that book that the lowering taxes, income taxes, is ultimately absorbed into the real estate market because it gives people more spending power and they're able to service bigger loans, which drives property higher. So what have we talked about today? We've got bullish credit growth. We've got developers presenting to their shareholders strength in the housing market and ways that they're looking to take advantage of it. And we've got the grants that came out last year still rolling through the system, plus future income tax coming up, which will also drive the cycle. So it all points to a big housing cycle coming up. And there's a lot of ways to play this. You can play it in the property market, or you can play it in the stock market via REITs, builders, financiers, brokers. Lots of different angles to monetizing what's going on right now. Depending if you're a trader or investor, there's lots of different strategies you can put in place here. So that's it for today's video. Give me a thumbs up if you liked it. Subscribe to the Daily Reckoning for future updates on the housing cycle. We've got plenty of commentary coming through from me and also Catherine Cashmore, Australia's most, in my opinion, the best commentator on real estate in the country. Thank you for joining me, and I'll see you next week.